And I have an economics background, so I began to understand Bitcoin in a profound way, because he said to me at the time, he said, this is what I've been waiting for since the U.S. closed the gold window in 1971. And I said, okay, Art, that sounds like a pretty big idea. How big could this idea be? And he said, well, how big is the U.S. monetary base? And back then, it was $4.5 trillion. Today, it's a little over $6 trillion. And Bitcoin was the equivalent, we called it network value at the time, of $6.
Cathie Wood's journey with Bitcoin didn't begin with conviction. It began with curiosity. Back in the early 2010s, while at her previous firm, she and her colleague Brett Winton started exploring Bitcoin as an experimental idea. At the time, it wasn't clear whether blockchain technology would even gain mainstream traction. When ARK Invest was founded in 2014, Bitcoin and AI were grouped together under a single theme: the next generation internet. This decision reflected uncertainty, but also foresight. While artificial intelligence was gaining momentum following breakthroughs in deep learning, blockchain remained more ambiguous. Would it matter? Would people care? Or would it fade into obscurity? To answer these questions, ARK published its first Bitcoin white paper in 2015, collaborating with renowned economist Art Laffer. Their goal was simple but profound. Could Bitcoin fulfill the three core roles of money, a medium of exchange, a store of value, a unit of account? What followed changed everything.
Actually, we started looking at Bitcoin, talking about it at my last firm. And I brought with me to ARK the lead analyst, who was the person most intrigued by Bitcoin. He is now our chief futurist, Brett Winton. And I remember talking about it at our last firm, and it was simply a curiosity. Okay, let's see what happens with this. In 2014, when I founded ARK, we actually had, instead of 5 innovation platforms, we had 4. We had combined AI and blockchain technology into something called the next generation internet. And that's actually still the name of ARKW, one of our funds focused in those areas. And the reason we did that is, we had the deep learning breakthrough in AI. So AI was getting more and more attention, but, it was still very fresh, very young. And then blockchain technology, we were more intrigued, but we still didn't know if it deserved its own breakout, if, people would even, if their eyes would, glaze over just not in a lack of interest. So, but we were very interested, and we wrote our first white paper on Bitcoin in collaboration with Art Laffer in 2015. And we simply were asking the question, could Bitcoin serve the 3 roles of money? So means of exchange, store of value, unit of account. And Art Laffer, I'm not sure if you know Laffer curve, he's famous for that in the fiscal policy arena, but he's also a monetary scholar. His mentor was Robert Mundell, who won a Nobel Prize for his monetary theory. And so we put our thesis in front of Art, and from an economic point of view, he helped us tremendously. And I have an economics background, so I began to understand Bitcoin in a profound way, because he said to me at the time, he said, this is what I've been waiting for since the U.S. closed the gold window in 1971. And I said, okay, Art, that sounds like a pretty big idea. How big could this idea be? And he said, well, how big is the U.S. monetary base? And back then, it was $4.5 trillion. Today, it's a little over $6 trillion. And Bitcoin was the equivalent, we called it network value at the time, of $6 billion in market cap. Think about that, $6 billion, and he was saying trillions. So I personally invested right away. And we looked around for the best way to gain exposure for our clients. And we had to ask permission, New York Stock Exchange, SEC. We had to get through some regulatory barriers or bottlenecks. And we found GBTC. GBTC really, I think they had to go through a year of seasoning before they could launch it. And so that's where we started. Bitcoin at that time was $250. We took our first position in the summer of 2015 when Greece was threatening to leave the EU, and we noted that, wait a minute, whenever there's a headline like that, Bitcoin goes up. Hey, this is pretty interesting. It's acting like a hedge against disaster. And so we thought, wow, this could be not only a risk-on asset, but it could be a risk-off. It could serve both roles at different times. So I just want to add one thing there because I just thought of it. So I remember as we were evolving our Bitcoin thesis and evolving our DeFi thesis, Art Laffer, once again, he's been a huge influence on my thinking. He was my professor at University of Southern California. But more important, he's a monetary scholar, and his vital interest in understanding technologies, especially as they relate to economics. And I remember he said, in response to the crypto communities railing against TradFi getting in and spoiling the picture, he said that if that did not happen, then you probably would not see as strong a movement as we are going to see. He was very excited when he heard we were starting a spot Bitcoin ETF. He said, this is absolutely essential. If this new world is going to effectively take off and dominate, ultimately. Yeah, I wrote a letter at the beginning of the year, and in it you'll find a matrix of the correlations among asset classes, and specifically trying to understand Bitcoin. Many people, because we call Bitcoin digital gold, they think, oh, well, surely it's highly correlated to gold. It is not. In fact, and we did the analysis from 2019, which is when real institutional interest started evolving a little more intensely. The correlation between gold and Bitcoin over that time has been 0.14. But if you look at the last two cycles, you'll see that gold rallied before Bitcoin did. And we think the same thing is happening now. And we monitor Bitcoin to gold, and I feature it regularly in something called In the Know, which I do once a month. And on that chart, you'll see, yes, Bitcoin relative to gold has had a significant drop. But if you look at the longer term, you'll see higher lows in terms of the very long-term trend line. And so we think that the Bitcoin bull market is still intact. I realize we've been through what many would call a bear market, and yet down 50% is a victory compared to down 85 or 95.
As AI agents become more autonomous, a new economic model emerges. Machines transacting with machines, payments occurring in real time, minimal human intervention. Traditional financial systems, slow, intermediated, and costly, are not built for this. Blockchain-based systems, however, are decentralized, programmable, borderless. This makes them ideal for powering agentic commerce. Wood envisions a future where AI handles shopping, research, and decision-making, Payments flow seamlessly through blockchain networks. Entire industries, including healthcare and scientific research, operate with minimal human input. Even drug discovery is evolving toward autonomous, AI-driven labs, reducing costs and accelerating innovation.
That is still intact, and we do believe that Bitcoin will get to new all-time highs in this next cycle. Many people don't, but we do, and that we're on record saying that our base case for 2030 is 730,000. Our bull case is 1.5 million. We took a lot of flack or I did, for saying that stablecoins had usurped some of the role of Bitcoin, which is true, certainly in emerging markets. But what people missed when I was making that statement was that gold was rallying. So the store of value role of Bitcoin is also moving up. And in fact, the two cancel each other out. Actually, the stronger move has been gold relative to Bitcoins in terms of the impact on the Bitcoin price. So we think that we're in the bottoming out process. David Puel, who does our on-chain analytics, says the absolute capitulation would occur, meaning we may get there. I doubt it, the way Bitcoin and other assets are acting, but that drop-dead price range is in the 50 to 55,000 range. As I said, and you also are alluding to, we're seeing liquidity moves around the world. And many people, because the headlines are always talking about the Fed being hawkish, not wanting to ease. Well, guess what? The Fed funds rate is down 175 basis points. Yeah. And yet the narrative out there is, they're too hawkish. They're too hawkish. They have started easing. And I think we're going to have... I think because inflation is going to surprise dramatically on the low side of expectations, and I'll give you an anecdote, Pepsi. Now, what the heck does Pepsi have to do with this story? Well, we noticed that Frito-Lay about 3 months ago, cut its pricing 15%. And today it announced that its volume surprised relative to expectations significantly. That's what should happen in a low inflation world. You cut prices, you get more unit growth. And that's certainly the case in the technology world. And we're seeing massive deflation with AI training costs dropping 75% per year, AI inference costs, so how much does it cost ChatGPT to answer your questions? Those costs are dropping 85 to 95% per year. So I think we're going to see a massive wave of good deflation out there, and that is you cut prices, you get big unit growth, and that's why we expect real GDP growth to accelerate as well. When the Fed sees inflation dropping, and I don't know if you pay attention to Truflation, Truflation's inflation rate, even with gasoline prices doing what they have done, Truflation is up to 1.8%. It got below 1%. This is a measure of consumer price inflation. It's blockchain-based. It's based on tens of thousands of items measured real time. And the core inflation measure is up to only 1.3%. So there was a tug of war in inflation by all measures, including Truflation, that was in the 2 to 3% range for about 2.5 to 3 years. Truflation says all of those are going to resolve to the downside. And if that happens, we believe the Fed will ease. And one of the reasons they'll ease more is because the unemployment rate, while it is low, if you break it apart, you'll see entry-level jobs are being hit here. So companies are not firing, but they're not hiring either. So youth unemployment, or 16 to 24-year-old, that is at 8.5%. And now it did get to 11%. It's at 8.5%. But that tells you that there is slack in the system on the employment side, which is pulling wage growth down. Which is very interesting. If you look at any wage measures, you'll see they're decelerating as productivity is accelerating. So why would the Fed ease? The Fed would ease because the demand for money is increasing relative to the supply, and that's a function of unit growth. And its role is to equilibrate or to accommodate real economic growth. Yes. Well, you've heard of the expression agentic AI. Agentic AI. So we're all going to have a lot of chatbots working for us. I may have fewer than others. I just like to keep my life simple. It's like credit cards, You
don't have an open claw, Cathie?
But pardon? No, I haven't. It's interesting. I'll tell you my go-to, and our crypto team's a great example of harnessing Claude co-work and doing reports. We put out a Bitcoin quarterly and a DeFi quarterly. The Bitcoin one, I think, drops today. So this is Thursday. And the DeFi quarterly will drop next week. I think Ray Hattie and David Puel worked with, obviously, Lorenzo on this. And I think they have cut the time to do those very lengthy and with reports with lots of charts. They've cut the time to do that by 75%. And it's only going to get better from here. Think about that huge productivity unlock, freeing them up to do more deep research as opposed to, all of this superficial, and the reports aren't superficial, but actually making them. There's a lot of administrative involvement there. So, but agentic AI, just pulling a thread on that, at some point, they're going to let their bots just go out and do those reports. And, we're going to need payments. We have to pay Claude and pay other robots who are giving us, or other companies that are giving us access to this data. It's all going to be machine to machine, right? And what better than the internet financial system to accommodate it? Taking out the middlemen from TradFi is absolutely essential if we're going to unlock these productivity gains. And so agentic commerce, same thing. I hate shopping. I really do. And I will have a shopper for me who knows my styles and is going to actually be trained by my personal shopper, Lillian, who's semi-retiring anyway. And, it's just going to do shopping for me, and I am not going to have to walk into a store. But agentic payments ecosystems are going to be essential. And we do think they're going to be blockchain-based. So yes, and even in healthcare, we're seeing in drug discovery and trials, we're seeing really labs evolve that have no people involved in them, but they're enabled by the both DeFi and blockchain technology and peer-to-peer generally to carry out trials. They're called self-something labs. I've forgotten what they are, but you can look it up. Yeah. And those are becoming the rage. So I think, yes, agentic AI enabled by blockchain-based ecosystems, payments ecosystems, are going to take over. So,
Cathie Wood's perspective is not just about Bitcoin, it's about a paradigm shift. From a $6 billion experiment to a potential multi-trillion-dollar asset, Bitcoin represents a new form of money shaped by technology, not governments. At the same time, AI is unlocking unprecedented productivity, while blockchain provides the infrastructure for a decentralized, machine-driven economy. Together, these forces are converging into what ARK calls the next-generation Internet system, where intelligence, value, and transactions flow seamlessly across a global digital network. Whether you agree with her projections or not, one thing is clear. We are not just witnessing market cycles. We are witnessing the early stages of a new economic